Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate filings, and sometimes, just sometimes, we find buried treasure. In this video, we're diving into Goldenwell Biotech's latest quarterly report, and let me tell you, it's got its own unique flavor of financial storytelling. So what's the big deal with this report? Well, Goldenwell Biotech is giving us a peek behind the curtain for the period ending June 30, 2025. Think of it as a quarterly checkup, but for a company that's still, shall we say, finding its footing. They are a smaller reporting company, which means they don't have to share as much detail as the big players, but even the small bits can tell a story. Let's jump straight into the heart of it all, the financial statements. This is where the real action is. Looking at their balance sheet, we see assets. On the asset side, their cash position has actually grown quite a bit, from about $49,000 at the end of last year to over $76,000 by June 30th of 2025. That's a nice bump in cash. They also have inventory of $25. That's a nice bump in cash. They also have inventory, which seems to have stayed the same. Now, when we look at liabilities, things get a little more interest liability. It's a nice bump in cash. They also have inventory, which seems to have stayed the same. Now, when we look at liabilities, things get a little more interesting. They have a lot more in current liabilities compared to last year, mostly due to some unearned service revenue. And then there's this long-term liability, which when you subtract a discount sits at about $78,000. Overall, their total assets grew from about $24,000 to just over $51,000. Not a massive jump, but a move in the right direction. However, their total liabilities also increased, pushing their stockholders' equity into negative territory. They ended June 2025 with a negative stockholders' equity of about $86,000. That means on paper, their liabilities are more than their assets. Remember those negative equity figures? They're growing, which isn't ideal for a company trying to build value. Now let's talk about how they're doing in terms of making money, or in their case, losing it. The statement of operations shows their revenue and expenses. For the first 6 months of 2025, their sales were a mere $397. That's practically nothing. And for the same period in 2024, it was zero. They also have service revenue, which seems to be a more significant piece for them. They earned $37,500 in service revenue for the first half of 2025, the same amount as last year. Their cost of revenues was actually negative for the period in 2025, which is a bit odd, suggesting they might have taken back some costs or made adjustments. This results in a gross profit that's basically the same as their service revenue, around $37,500 for the first half of 2025. However, their operating expenses, primarily general and administrative costs, ate up most of that. They spent over $72,000 on these expenses in the first 6 months of 2025, compared to about $76,000 in the same period last year. And the bottom line, they reported a net loss of around $39,500 for the first half of 2025. That's an improvement from the over $80,000 loss in the first half of 2024, so there's that. Let's look at the cash flow statement to see where the money is actually moving. For operating activities, they used about $27,100 in cash during the first 6 months of 2025. Last year, they used a little more, about $76,700. So again, a slight improvement in controlling cash burn from operations. On the financing side, they didn't bring in any new money through stock issuance, which we see as zero for both periods. However, they did have financing cash flow of $49,250 in the 2024 period, which apparently involves some form of loan, but for 2025, that figure is zero. This lack of new funding through financing activities is a significant point to consider. Despite using cash in operations, their overall cash balance increased by about $27,100 in the first half of 2025, bringing their total cash to over $76,500. This increase seems to be from sources other than operations or financing activities in 2025. So who is Goldenwell Biotech? They're a Nevada corporation with their main operations, or at least mailing address, in Ohio. They say they're in the development stage, focusing on research, development, production, and sales of healthcare and supplement products. This is a big one. Under going concern, they explicitly state there's substantial doubt about their ability to continue as a going concern for a reasonable period. This basically means they might not be able to keep their doors open unless they can generate more revenue and get more money from outside. Their accumulated losses are significant, over $1.3 million. This is a serious flag. They mention they follow generally accepted accounting principles, or JAC. They also note that these financial statements are unaudited, which is common for quarterly reports, but it's always good to remember. Related party transactions. These can sometimes be a bit tricky. It looks like they bought inventory from a company owned by their treasurer. Also, their CEO lent them money. Total loans from this CEO amounted to about $95,599 as of June 30, 2020, 2029 IV. Related party transactions aren't inherently bad, but they do warrant extra attention. On the tax front, they have net operating losses, or NOLs, that can be used to reduce future taxable income. However, because they haven't been profitable, they've put a full valuation allowance against these deferred tax assets. This means they don't expect to be able to use them anytime soon. Regarding stockholders' equity, they have authorized 300 million common shares with about 99 million issued and outstanding as of June 30, 2025. They've had several stock issuances in the past for cash or as bonuses. It's important to note here that with negative equity, the value of each share on paper is currently negative. Now, let's shift to management's discussion and analysis. This is where the company's leaders explain their performance. They reiterate the going concern issue here, stating that they need to raise capital to fund their business plan and achieve profitable operations. They mention their plan to raise funds through debt or equity offerings, but frankly admit there's no guarantee they'll be successful. This lack of immediate funding certainty is a major risk. Their plan of operation is quite basic: increase sales of their products. They are projecting significant capital needs, around $5 million to build out manufacturing facilities, which they estimate will take about a year. They acknowledge that this will likely lead to dilution for existing shareholders if they raise funds through equity. The stark warning that if they can't get the financing, their business will fail is pretty direct. When comparing the first 6 months of 2025 to 2024, we see that sales are still minimal. The service revenue remained flat. Their net loss has decreased, which is a positive sign, but they are still operating at a significant loss. Here's a really critical point. At the end of June 2025, they had about $76,500 in cash, but their total current liabilities were over $350,000, leading to negative working capital of nearly $100,000. They state they have enough cash to fund operations through the end of 2025 figures. The need for $5 million to build out facilities underscores their substantial funding gap. They also clearly state there's no guarantee of securing this financing. As we saw in the cash flow statement, they continue to use cash for operating activities, although the amount used has decreased. The lack of cash flow from financing activities in 2025 is concerning. It means they aren't actively raising new capital through loans or stock sales in this reported period to bolster their operations or future plans. Under controls and procedures, their CEO and secretary, who also serve as principal accounting and financial officers, have concluded that their disclosure controls and procedures were not effective. This means they aren't confident that information is being properly recorded, processed, and reported within the required timeframes. This weakness in internal controls is another red flag. Scroll Sprott 2. Other information person, the other information section, they state they are not subject to any current legal proceedings, which is good. They also reiterate they are not required to provide detailed risk factor disclosures because they are a smaller reporting company. The exhibits list the usual formation documents and certifications. Nothing particularly groundbreaking here. The certifications of their principal officers about the accuracy of the financial reporting, given the conclusion about ineffective controls, are quite noteworthy. And finally, the signatures. The report is signed by the CEO, Shuang Liu, and the secretary, Hua Xie. Okay, let's talk about the story here. Goldenwell Biotech is a company in a very early stage, trying to get its healthcare and supplement business off the ground. They have minimal sales revenue, relying more on service revenue. The biggest takeaway from this report, and it's a stark one, is the continued going concern issue. They are burning through cash, have a substantial accumulated deficit, and negative stockholders' equity. The lack of new funding in this period, coupled with their stated need for millions to proceed, and the admission that their business could fail without it, paints a very uncertain picture. The fact that their principal officers have declared their disclosure controls and procedures as not effective adds another layer of concern about the internal workings of the company. From a Warren Buffett perspective, you'd be looking for a business that's profitable, has strong fundamentals, and a clear competitive advantage. Here we see a company that's yet to prove its business model can generate meaningful revenue or profit. The reliance on external funding, the negative equity, and control issues suggest this is a very high-risk investment. There are opportunities in healthcare and supplements, but Goldenwell Biotech needs to demonstrate a solid path to profitability and robust internal controls before it can be considered a stable investment. What's your take on Goldenwell Biotech's situation? Do these numbers give you hope or raise alarm bells? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more detailed corporate insights. And don't forget to join our Discord community linked in the description for more discussions and to connect with fellow corporate finance enthusiasts. Thanks for watching, and we'll see you next time on Corporate Decoder.